All right, happy Monday, party people. You can officially play a 7-on-7 rugby game on my forehead. Look at this thing. Just crazy what's going on up there. All right, today we're going to talk VA funding fee. Somehow I messed this up. I don't know how I did. I tried so hard to not screw this up because I am a one-man band here, and it's very easy for me to make mistakes. Apologize. Wanted to pull this up and then pull this up. We're going to talk VA funding fee. This is our question of the day. What is the VA funding fee? How much is it? How does it work? And then we're going to get into the timely stuff. We'll talk about mortgage rates. I got a couple things to show you happening in the financial markets that are interesting today, particularly as it equates to mortgage rates and what I think will happen from here. Wow, am I bullish on mortgage bonds? How could I possibly be saying that? We'll talk about that in just a second. So here's the VA funding fee. I made this cool little cheat sheet for my update at the beginning of 2020. And this is still holding true through to today. Now, this does not have anything to do with entitlement. So I want to make sure everyone understands that. You can get the two confused sometimes. But this is a basic breakdown of the VA funding fee. Now, first and foremost, understand this. If you have a VA disability rating of any amount, there's a misnomer out there that you have to be 100% disabled to not pay the funding fee. No, any disability through the VA at all, any type of rating, you do not have to pay the funding fee at all. Now, if you don't have a disability rating, you do have to pay the funding fee. If you do have to pay a funding fee, just know this is how the VA funds the VA loan program. So the VA mortgage program is funded by the funding fee. So just know that if you pay a funding fee, you're helping your brothers and sisters to be able to access the VA home loan benefit, including those who have a disability rating. So it's part of it that it actually helps the program exist for everyone in order to have it. So on this sheet, you'll notice it say, increase to. Okay, so these are the new numbers. So we're going to talk about if you're doing an IRRL. What's an IRRL? We're missing an R in the IRRL here. Someone screwed up when we made that graphic. It's an interest rate reduction refinance loan. There's 3 R's. When you do an IRRL, that means you already have a VA loan. You're refinancing to another VA loan, and you're doing the IRRL. You don't need an appraisal. You don't need income documents. You don't need asset documents. It's the easiest refinance in the history of mankind, and a lot of people are doing it right now. A lot of people are doing it. I can't believe how many people have like 3% VA loans or 3.5% VA loans. Crazy. Rates are low, team. Shoot me a call or a text if you are in that situation, and we'll make sure you save some money. Now, regardless of whether it's your first time use, we have this categorized in 2 different ways up here: subsequent use and first time use. Why? Well, because there's different amounts. For the IRRL, though, it's the same. It's 0.5% both ways. This thing is so dumb. It's 0.5% either way. So 0.5% of the loan amount. So these percentage rates are of the loan amount. Now, if you're doing a cash out refinance, that's a little bit different. Cash out refinance is either going to be 2.3%. That's if it's your first time use, right? Your first time use, 2.3. Second time use goes up to 3.6%. So that's where it starts to get pretty hefty. So when that starts to get pretty hefty, if you're doing a cash out refi and you're going to pay 3.6%, you got to really take a look at the numbers and see if it makes sense. Got to really take a look at that. That can add up. So I like to help people calculate that ahead of time before they get too far down the road and appraisal order don't realize they got to pay that fee. And it's not, the VA funding fee is not out of pocket. I should have mentioned that. The VA funding fee is not an out-of-pocket fee. It is something that is included in the loan. Even if you're doing a purchase, let's talk about that now. You're borrowing 100% of the purchase price, you can still get the VA funding fee added on top of that. So then you would just have to pay for closing costs. So this is just such a huge advantage. The VA home loan benefit is such a huge advantage because of this, because nobody else can get a loan that's this good, first of all. And second of all, even though you have a fee to pay, you don't have to pay it out of pocket. So it's just a tremendously advantageous loan scenario. And, for people who don't have access to the VA home loan benefit and you're watching this, you're like, oh my gosh, I wish I had access to that. How come I had to put so much money down to buy my house? People who buy VA, they don't even know what everyone else goes through to buy a house. It's so much more difficult money-wise. But this is what's great. I love it. I love the fact that our veterans and active duty service members are eligible for a program like this. They have a program like this. They have entitlement to buy homes with less money down and to get into homes. They deserve to own a piece of this country that they've defended. So, all right, let's look at purchase. So this depends on down payment. So first time use, right? With no down payment, it went up to 2.3%. If it's your second or subsequent use, second, third, fourth, fifth, whatever, it's 3.6%. That's with no down payment. If you put down 5%, but not up to 10, so somewhere between 5 and 10, then you go to 1.65%. That's also the same for subsequent use. If you put down 10% or more, it's 1.4. So this is where, like, if you're using your fifth VA loan and you have 10% to put down from the home that you just sold to put towards the new purchase, you can save yourself a ton of money, because instead of paying 3.6, now you're going to pay 1.4. So if you have the ability to do this, you really should. Because look, you're getting immediate 2.2% of the loan amount. So let's say you're buying for, what's an easy number to do 2.2%? 500,000. So that'd be 11 grand. So you're immediately getting $11,000 return on your investment for putting the money down. Plus your payment will be lower because you're putting more down and because you're reducing the funding fee. So it's a huge win-win, and actually a really, really good investment. I look at it as an investment. I'm taking my money, I'm going to put it into my equity. I'm not paying a fee. I'm not buying a stock that could go up or down. No, I'm getting guaranteed win. My payment is going to be lower for the life of my loan because of my down payment. My funding fee is going to be lower, which is going to give me immediate money. I mean, immediate. This is worthy. This is so worthy of the... I get immediate money on this. And so immediate return plus long-term return. So it just makes a whole lot of sense to put the money down if you can. Okay. So that is the VA funding fee and how it works. Hopefully that's helpful. Let's dive into some timely stuff. Want to take a look at rates? Of course you do. So this is where it gets really interesting. I'm not always right, but man, was I right about this one. This move right here, not a pump fake, but it's just, hey, this is selling the rumor and then buying the news. Watch what happens here. This was before, back here, this was the first day that the Fed really scared us. Then we had a huge rally after that. Went all the way up here. Now we've fallen from grace. Okay, that trend line got broken, fallen down to here, and we've just sort of been slowly steady eddying higher here. And I like that. I like that a lot. But I'll tell you what I really, really like about this. And remember, mortgage bonds going up means rates going down. That's what we want to see. We want to see the price here going higher. The opposite is true. If mortgage bonds go down, rates go up. So the last few days have been really, really important. And I'm not a huge technical analysis guy. I know it may seem like it because I look at this stuff. I'm doing very, very basic stuff here. But let me tell you why. Number one, the 100-day moving average right here, this purple line, it held. It held the first time it was tested. It held the second time it was tested. It looked like the bears really wanted to get us on this day. That was Thursday. It held there. A little bit of an indecision candle, but it held. And then on Friday, boom, shakalaka. Not only did the 100-day moving average hold after a serious test. Look at these wicks sticking out down here. I mean, the bears are really trying to take these bonds down. Goes up, blasts through the 100-day, then also goes through the 50-day. And then today, we blasted through the 25-day. The only thing that's left, team, is the 200 up here. And we've closed now for the day above this 25-day moving average. So very, very good. Even though there's not a lot of basis points here, this is like maybe a total of 50 basis point move. The traffic that we just got through and the support down here, oh man, this is big, big, big. I mean, you never know what could happen. We've got several issues to get through here. The 200-day is there. We've got a huge Fibonacci up here. We got a lot of things to get through. But again, the bad news is already out in the open. The bad news that caused this big sell-off here, remember I told you, so they know something we don't. What was it that they knew? They knew that the Fed was going to taper. Okay, let's actually pull something up here. So they knew that the Fed was going to taper. They knew that the Fed was going to taper this year. I actually had this article pulled up, and then it got, look at this, just completely bamboozled. So Powell comes out and says, hey, we're tapering this year. So remember how this happened. This went down. Powell at the beginning of the year said we might be tapering this year. Financial markets were not happy about it. So he came back and said, hey, we're willing to do whatever it is we need to do for as long as we need to do it. We're not even going to talk about tapering. The next meeting, they go, okay, we're tapering. Okay, we're tapering. So they're going to taper this year. They're going to start peeling back those bond purchases, which is good. And sort of what I expected to happen has happened here, which is basically just, the stock market is going to have a hard time, building up momentum in that environment. Now, they did say they were going to leave the overnight lending window at basically 0 to 0.25%. So they're not going to raise rates. They're just going to pull back on their bond purchases. Not raising rates, but peeling back on the bond purchases is sort of like, okay, that's the beginning of the end, right? That's like the first domino or two of the Fed getting out of the way. So if it's the case that, that's the way the market perceives, and it kind of looks like it is. I mean, relatively flat today. Nasdaq up almost a point, though. S&P up half a point. Dow's staggering here. But if that's true, if I'm right about that, and that's the way the market's going to interpret this, then we could see some weakness in stocks. We could see some serious weakness in stocks. A 5 or 10% pullback, something we haven't seen in forever that's vastly, greatly overdue. That's something that I would expect to see, potentially. That's if I'm right. Now, that could, in turn, send money back over here to the bond market. And that may already be starting. That may already be the reason why we're seeing these moves higher, because money's already rotating out of stocks. I don't know yet, but that truth will come. The serum will be there for all to see here soon. Seeing oil back up near almost to $70 today, based on what's happening with the hurricane. These tropical storms always cause a little surge. Just get us back to it. I told you it was a good time. I told you in the low 60s. It was beautiful. Dollar cost average in. Gold over 1,800. Pretty much been right around 1,800 ever since I've been covering it. The most boring thing to watch ever. The not most boring thing to watch ever is Bitcoin, which is now down to $47,000. This has been all over, the $46,000 to $50,000 range now for the last couple of weeks. Bitcoin likes to go sideways like this before it goes higher, which is what I expect it to do. It's designed to do that, so why wouldn't it? But you're seeing some weakness right here, right now. However, Ethereum, through all the red in crypto today, Ethereum's still higher. What's going on there? I would love to know what the world's going on there. Here is one thing. If you're not a CNBC Pro subscriber, which I'm not, this might be worth reading. John Paulson, pretty smart guy, says that inflation will shoot much higher, and he's positioning with energy and gold bets. Energy and gold. What have we been talking about? Not gold. No, digital gold, Bitcoin, energy, Exxon, Chevron, USO if you want to get diversified with it. But different things there that I think it's a good idea to have some exposure there, because energy's big, and when there's inflation on the way, energy costs almost always go higher. That is a laggard, not a leader on that equation. So just be careful, for that to be coming. There could be inflation, which, but here's the thing though. If inflation really is there and we really do see it, it'll murder the bond market. And that's not what we're seeing right now. So in his hypothesis, my understanding from this is his hypothesis is basically that it's going to take time for the inflation to really flush through and become part of the system. I think we've already seen it. I think it's already here. I don't know if it can get, how much worse it can get before it gets better, but I do think that it's something we have to keep an eye on. And usually the bond market will tell the tale. The bond market's so much bigger than the stock market. The bond market's humongous. And the bond market right now is not seeming to be too concerned about much, at least the mortgage bond market. So, which is the one I track and why you're probably watching this, because that's what I do. But bottom line is this. There is always opportunity in any market. And I think right now, the most obvious thing is real estate. And what's been happening in this real estate market is you're starting to see more deals take place. You're starting to see people. We got into contract over the weekend for one of my buyers, VA buyers, who is buying a place for $30,000 less than what it appraised for the last time it was in escrow. So it was in escrow, fell out, was appraised for $835. They're in for $805. So You're starting to see people get some deals. I had an offer accepted the first time, no counter. First offer in, accepted. Boom, no counter at all. So you're starting to see more opportunities on the real estate front. If you have been sort of kicking, the idea around, it might, oh, well, we don't want to get into a bidding war. You don't have to. There's plenty of opportunities out there if you're patient. You just have to stay on it. It's almost like a second job to keep an eye on properties and real estate while you're on the hunt. It really is. I've had a second job doing this all year. Haven't been able to pick one up, but I have a feeling that my luck is going to change soon. I have very specific inventory that I'm looking for, so I'm a weirdo in that regard. But a lot of people are particular about the house they want to buy, so that also makes sense. So just stay after it. Know that there's opportunity out there. The market is getting better for buyers, so stay diligent. And if, of course, let's say you have a question, call me, text me, email me, whether you want to buy or refi. That's what I'm here to do, here to help. No commercials on this channel for that reason. If you need me, let me know. Everybody have a great day, and we'll keep you posted.